Good morning, everyone. My name is Stephen Stewart. I'm the CEO of QC Copper and Gold. We're traded on the Toronto Venture Exchange under the symbol QCCU for Quebec Copper. It is April 5th, and I'm very excited to announce a very strategic and substantial acquisition we have made. We have acquired the Roger Project, and the Roger Project is in the Chibougamau district. It's just a stone's throw away from our flagship and core focus, which is the Opemiska. And I'm going to run through the acquisition here, why we did it, its technical merits, its resource. It's got a substantial resource, which is pit constrained, and it has, we think, substantial upside exploration. I'm going to run through why we think that, and I'm going to talk a little bit about the terms and why I believe this is a very accretive transaction for our shareholders. So here we go. Disclaimer, forward-looking statements. I will say many. Before I get into the details, I will just remind everybody what exactly QC Copper is all about. We are focused in the Chibougamau district of Quebec. As I said before, our flagship and core focus, and which will remain our core focus, is the Opemiska Copper Mine Complex. We are currently undergoing a 20,000-meter drill program on this project to deliver its maiden 43-101 pit-constrained resource on the Opemiska. Just like the Roger project has, we expect we'll be able to deliver that towards the end of Q2. We're about halfway through that drill program. It's going very quickly, and we're going to have results soon. I'll end the presentation with a brief update on that. We believe this resource is going to be robust, and it's going to be a copper-rich deposit with a gold credit. We've got a very proven and aligned management team led by myself, and all the technical aspects are led by Charles Beaudry, and we are very optimistic on the fundamentals of copper and gold, of course, and we think we're very well positioned to deliver a substantial resource within one of the most interesting gold and copper districts in Canada, which is the Chibougamau district. As I said, the Chibougamau district. Here we are. This is we're smack in the middle of Quebec. This is where the Opemiska is. We're going to add the Roger project or the Roger project in there shortly. We put this presentation very quickly because this transaction happened pretty quickly. But this is where we are, Chibougamau. It's a fantastic place to do business. In fact, Quebec's probably the best jurisdiction in the world to do business. Chibougamau has access to infrastructure, power, labor force, very sophisticated First Nations groups and local communities who understand and appreciate the value that mining brings to the community. This is the Opemiska project. I'm not going to get into this, but I can't not remind people what we're doing here. This is our core focus here, Springer and Perry. This is going to be a single resource, open pit constrained 43-101. That's where all of our drilling is focused on. And then we've got about 12 kilometers of the Gwillim Fault, which takes us almost over to where this Roger project is. And here we go. So this is our recent acquisition. We acquired a 50% interest from a company called Pasofino. This transaction just occurred today. And the other 50% is owned by a group called SOQUEM. And SOQUEM is a Quebec government exploration organization that exists to promote mining and exploration in the province of Quebec. One of a number of many Quebec government institutions that do that, and again, which adds to the rationale why Quebec is world-class in terms of a place to operate. So what is the Roger Gold Copper Project? It is a pit-constrained 43-101 resource of 333 gold equivalent ounces, plus another, those are indicated ounces, plus 202,000 gold equivalent inferred ounces. So add those two together, you're north of 500,000 ounces of gold equivalent. It's gold rich with a copper credit. This resource was delivered in 2018, and it is off the back of 58,000 meters of diamond drilling. And it's approximately, it's about 1,000 hectares and covers about 10 square kilometers of the Chibougamau mining district. Again, just like the Opemiska, has fantastic infrastructure, all weather road access, very close to the town of Chibougamau and very close to our Opemiska. And the last point I'll make on this, it has no royalties. So it is a completely royalty-free project, and it has underground workings. There's a ramp on the project, about a kilometer-long ramp, which has the ability to be dewatered and go back down underneath for exploration and eventually potentially some excavation. So it's an advanced stage project. I think it's extraordinarily strategic. I know there was a lot of people that were very interested in this project. I consider us to be very fortunate to have been able to acquire the interest in this project, and it's going to be a very key piece of the Chibougamau puzzle going forward. So it's great news for shareholders. I'm very excited. So here's a little wide out map of where we are. When I say we, I mean our Opemiska project here is in Chapet. This is where the core of the resource will be. Our property boundary actually comes all the way over to here. This is about 15, 20 kilometers from here to here. And then this is approximately where the Roger project is. So it's quite proximate. Here's the town of Chibougamau. They've got access coming in there. There's roads all around. It's really, as I said, fantastic infrastructure. But this really is a strategic, proximate asset, which is going to add to the attractiveness for our shareholders and prospective shareholders going forward. Again, I think I have the vision to consolidate this district, although it takes time. I want to emphasize that our near-term focus remains on the Opemiska, but this was an opportunity that we could not overlook when it came to us. And it came to us vis-a-vis relationships. People who knew our group approached us, and we did a deal relatively quickly, and I think the terms are fantastic, which I'll run through shortly. These are some geologic maps. You can see here, this is east-west trending structure, and they drill perpendicular. And this is a model of it's likely a GEMCOM model of the open pit. As I said, those 530 some odd thousand gold ounces are pit constrained. And I think I want to emphasize what that means. That means if you were to go below the pit, there is more gold, and I'll demonstrate that. So that 500,000 ounces is only considered within an open pit context. And that open pit shell could change pending further drilling, and that's something we're going to be investigating. This is a cross-section of that same pit, and this slide to me speaks to the upside. The resource itself will be encapsulated inside this pit, but clearly you can see that these veins dip much deeper than the pit. And there is historic drilling, which I'll run through in a moment, which shows very clearly that there is very wide mineralization that extends beyond the parameters of the pit. So this, in my mind, this resource has expansion capabilities beyond what is defined in the 43-101 with the information we have at hand, let alone the information we're going to attain through further drilling as we develop this property. So the economics of the acquisition are as such. We paid a total consideration of $2 million. That is broken down into $1 million in cash paid on closing, and an additional $1 million worth of shares in QC Copper, our company. At market close, when this deal was actually penned on Friday, we closed at 18 cents. That works out to be $990,000 of shares, because we issued 5.5 million shares. So again, total consideration, $2 million, 0 royalties. The total ounces in the ground are about 535,000 ounces at about 1 gram gold equivalent. As I said, it's mostly gold, but there's definitely some copper. There's even some moly and zinc. It's really a polymetallic deposit, but certainly gold rich. So when you think about that, when you do the back of the envelope math, we paid, and considering we have 50% of this, we paid about $7.50 an ounce in the ground, pit constrained in the middle of Quebec. I think there's no other way to describe that but a good acquisition, especially if it offers upside, and does it ever. So this is a snapshot of the resource, which was delivered in 2018. I should note that the metal price assumptions here are relatively low compared to what we see the metal prices today in April 2021. The gold is priced at $12.40 US, silver just over $16, and copper at $3. Obviously, we all know the prices have come up substantially since then. Copper is 33% higher, and gold, back of the envelope, same. And those are the two highest payable metals here. Now, why I mentioned the gold price is because that impacts the cutoff grade. And so you're going to see here in the sensitivity chart, in this resource, when it was struck, the cutoff grade was 0.45, and that is where we get the 535,000 ounces. If gold price or copper price increases, well, that allows you to mine at a lower cutoff grade, and hence the purpose of these sensitivities. Now, I'm not going to make any assumptions. I'm going to let this chart speak for itself. But if you look, if theoretically the cutoff grade was dropped to 0.25 grams per ton, and potentially that would work at, say, $1,700, $1,800, $1,900 gold, well, that resource goes up substantially. Now, you're obviously mining more tons, and that impacts the economics. But at the end of the day, you see you've got 454,000 ounces in the indicated department, and you've got nearly 300,000 ounces in the inferred department. So that brings that resource up to what's the math on that? 750,000 ounces. So it increases it quite substantially if the price of gold and copper changes, which it has. So I think just by financialization of the gold price and the metals prices, this project offers upside potential if you believe gold price is going to stay where it's at or increase. And I certainly do in the future. And I suppose that's a forward-looking statement. If you want to evaluate the context of other assets, this is a chart that I pulled from RBC Capital Markets. They do a really good job of following where per ounce in situ multiples trade. This chart here is the gold price layered on top of the EV per ounce here. So it's anywhere from 70. It goes way down here at maybe $12 an ounce, and this is at the financial crisis here, but it's not very a fair analysis here. But you can see it hovers anywhere between maybe $30 and $70. Now, there's a lot of noise in that. There's a lot of, these are projects all over the world. These are some small projects. Mostly they'll be million ounce plus type deposits. This is breaking down a little bit more, but what the point I want to make here is if you look at the valuation, the per ounce EV valuation, range here from anywhere from 376. I think that's rich, but even the lowest price here is $7 per ounce, but that's 25 if you look at the MNI. So the range here, the medium, let's look at the medium and the average are $77 and $44 per ounce. We acquired this in the $7 an ounce range. This is in Quebec. It's probably not as large as many of these deposits, but it certainly has the potential to get significantly larger. I just demonstrated that with the sensitivity charts, and that's without further drilling, which is absolutely warranted. So I think this is a really fantastic acquisition. I'm impressed by the economics. I'm impressed. The more I study the geology, I'm excited about the upside potential. This drill hole was drilled in 2018, and I think 2018 was really the depth of the market when nobody cared, and this must have gone overlooked. When I saw this hole, I really couldn't believe my eyes. It is 514 meters at let's round up to 0.3 grams per ton. Now, 0.3 grams per ton is not high grade. There's no other way to describe that. But when you drill half a kilometer from surface, that is something to me. That presents there's quite a large and wide system that is clearly mineralized, and I think there's more going on here than meets the eye. And you can see there are higher grade zones within those copper gold here within 54 meters. There's almost a 1 gram per ton over 81 meters. So this hole 94 drilled in 2018 to me presents a lot of smoke. I don't know how else to say that, but that's a very interesting hole. The property has not been drilled since then. So I think they did a modest drill program. They got some very interesting intersections, and they just never focused on it since then. So there's substantial opportunity to go back here, evaluate what's been done, and get a new plan going forward. These are two other holes from the same drill program in 2018. Again, pretty impressive in terms of width. The hole here on the right is 0.8 grams per ton over 112 meters. Very, very shallow. Again, I just got to emphasize this hole here starts at 15 meters. So 15 meters from surface in pit material. Same with these two holes. We're getting, copper gold mineralization over very wide widths. 0.7 here as well over 45. I mean, those are substantial. I'd love to see them at 3 grams per ton over the same widths, but to have, call it 3/4 of a gram to a gram over these widths in a pit in Quebec where the infrastructure is there, it really starts to get very interesting. So that's the project. Before I wrap up and move on to the update of the drilling, I got to say, hats off to our team for pulling off this transaction. We're very proud to have done it. We're proud to be partners with SOQUEM, who is as I said, is a great partner in the province of Quebec. And we'll have more information as we develop it. So as I sign off here, just a quick update on our drill program for our Opemiska project. As of a few days ago, we had 39 holes. I'm sure we've completed 2 or 3 since then. We're almost 50% of the way through. The drilling is going fantastic in terms of daily production. We drilled about 105 meters per day. That's over a 24-hour per day period. We've got 2 drills on the project as we speak, and we're moving quickly. And I can say that results are coming very soon. So please stay tuned for that. We'll have another webinar coming out with Charles when those results come out. We'll be very pleased to do so. So that's it. Again, summary of our Roger 43101 pit constrained acquisition in the Chibougamau district, and a brief update on our Opemiska drill campaign. These are my contacts here. I'm available anytime, and I appreciate you taking the time to learn more about QC Copper and Gold. Thank you.